Welcome everyone to the Prospero.Ai special AMA live stream this week. We're doing a special Tuesday 2 p.m. live stream. Um, this is not our regular time. George's streaming setup is giving him just crazy troubles, but he's going to be joining, I believe, on his backup setup. Hopefully we get some people funneling in here. I just sent out our email update. Welcome from Twitter and YouTube. But today's stream is really just to answer the questions that our community wants to know. And so we're going to be taking all questions from the chat, and we're hoping to get a lot of activity today. We did come with some topics just in case we don't get too many questions, but I think we will. So let's see if people funnel in here. George is joining up. Hello, George.
I'm still battling this camera for one more second. But
we are live, just so you know. We have audio, but no video.
I'm battling it one more time. It is struggling. I want to see one more thing before I give up and just switch to the other computer again, which is just very, very frustrating. I just wonder, maybe it's Microsoft Teams. Like, who knows what is taking up this situation? Exit, hold on. All right, I'm just gonna be right back. And
we'll be here. There he goes. Welcome everybody watching today. If you didn't catch me the first time before George joined and said it, we're going to be doing an AMA live stream. So when George gets here, I hope we have some questions in the chat that you really want to know, because we want to answer the community's like most desired questions and what you want to learn about Prospero, the signals, what's coming to the app, any of George's business background, anything about AI, investing philosophy, strategy, really anything that you're curious about. Today's stream is just designed to answer your questions. So welcome to the stream. Comment if you're watching on Twitter or YouTube. If you like our normal live streams, please like, subscribe, share with people. We love building the channel. Let me check on our current subscriber total, because yesterday we streamed and I said we got to get to 900 by the end of the week. I think we were at 887, and today we're at 896. So we're doing a pretty good job, but we're still 4 away. So if you're in here and you're not subscribed, please subscribe and like the video. It's good for the algorithm. I see George joining up again. Let's see if it works this time.
yeah, no, that's just it's just being incredibly difficult. All right, I give up. Sorry, everyone, that we keep encountering these problems. I'm very frustrated by this camera setup now, and I'm going to move back to my other computer. Hold on.
No problem. All right, let me know who's in here. Do we have Joseph? Do we have Wolf? Super Banco? Who else are some names I would recognize in the chat? Mikey Rogues, YouTube. Hello, Mikey. Joseph, there you are. What camera is George using, just so I don't buy the same one? Yeah, right. I don't know the name of it, but I know when we did our in-person live stream, I believe 2 weeks ago on Wednesday, his setup is sick, but something's going on with the camera, the lighting, the sun in the background. I'm not sure what's going on, but I think once he gets the technical figured out with it, it's going to be beautiful. I mean, you've seen the like image that it produces. I'm also in an alternative location today. I don't know if you could hear my dogs in the background, but I'm snowed in at home, so I couldn't leave. Thoughts on Deadpool 3 trailer? I'm a big fan of Deadpool personally. I think the movies are really funny, and honestly, I saw the trailer during the Super Bowl, but I didn't watch it too intently, so I'm not sure. I believe at the end there was like a Wolverine thing in it. Is that what you're alluding to? I think there's going to be Wolverine in the third one, right? What we were surprised by with the Super Bowl ads was that there was a bunch of Temu commercials, and they spent over like $20 million in one night, which is kind of crazy. Yeah, Deadpool is one of my favorite superhero movies. I would say for sure. If you want to call it a superhero movie, it's kind of out of the box, but Ryan Reynolds has like that weird sense of humor that I like. Jonathan, I didn't mention you, but I recognize your name as well. Here, want me to go through some of the topics that. So this is to spark your guys' curiosity because we want to get some questions today. But some topics we came with just in case are what happens if downside breakout surpasses upside breakout in Prospero? What does that mean for a stock? When should you take profits when investing? If there's any option strategies that Prospero can benefit, how the signals differ by sector is another one that we. Here's George.
Uh,
Hello, George.
yeah, sorry about this, everyone. About these ongoing difficulties. I would really like to get this new thing working. It's a little frustrating. I hate to keep you all waiting here. Um, but hopefully I'm just gonna like before I do it next time, I'm just gonna like need to leave tons of time. Um, but yes, I appreciate all of the guidance with this. Um, it can be very, very frustrating, and I get it. But I appreciate everybody that comes here. We're gonna have a good AMA. Hopefully, you guys can hear me. Um, yes, it's actually a pretty crazy. If you go like, it's a pretty crazy setup what I have, and I had someone that's a pretty talented director give a custom build. It's like a Canon. It's on a rig with sound and everything. I just went back to a normal webcam. Um, but yeah, I think that we definitely have those good answers coming. I don't know. I can jump right into Amy's. How do you think we should do this, Stephen?
Yeah, I think we should. Hopefully, we get a lot of comments. So I think we should just jump into all the questions that we get, and we'll just keep it rolling as we go. Can you see the comments, or do you want me to read them to you?
No, no, no. All right. So profit taking. Um, It really depends. It depends on tons of things. I think the best, like if you're firmly in any kind of profit, I would say above like 10, 15%. The objectively best thing to do, in my opinion, is a trailing stop loss, where you could basically say, I'm locking in 5%, setting and forgetting. Like that, I think, is the absolute best like risk management approach. Um, but uh and I believe, Mickey, I owe you or I owe you an email. I am going to send that back today. Um, but yeah, it really it depends. Like I would say the most important variables how much time and attention you have on this stuff. Where it's just like if you can watch all day, like what you have access to in terms of strategies are very different than if you can check once or less. So I would say RSI, I don't give a crap about is one thing. Because like if there's one thing that like you can talk to tons of Prospero users about, it's like they held Tesla, Meta through like very high overbought RSIs and have very nice profits to thank for it. I think the Prospero signals is just way better than technical signals. I think technical signals are fine. Like, but I would say like this was what plays in like technical signals, I think, are way more useful if you're trading and you have a whole day to watch. Like, otherwise, I just don't find them to be all that useful, other than just as an extra verification check to manage my risk. But like, I think there's very simple, like, profit taking is very complicated and it depends on your risk. There's people that just will take 5% profit every time and that's it. And they're just out. And then like it's a very tight strategy and they'll only go long short and they'll take 5% profit every time and they'll cut out 2% loss every time. Now, granted, there's things around earnings and things like that. Again, if you want a very tight strategy, you just don't play earnings to take some of those risks off the table. But those, it really, really depends on your risk strategy. There's no right way to approach profit taking or anything like that. Um, but yeah, I still think that like technicals are really not the right way to lean on it. It's more about like your personal risk tolerance that I would say is very important. Um, and hopefully that helps if you want to get kind of more specific about scenarios or even your risk profile. I think I could be more helpful there. How I approach this stuff um, is that I pretty much like to take once I'm 20% up on something, I like to take, probably anywhere from 25 to 50% of the profit, just right there. Just because, like, to me, it's important to lock it in. Then the next time I like to collect, I like to look to get back what I put in. So my position is free. And then presumably most of the time I like it enough where I'm just going to hold that free position. Obviously, if it's an option and it's expiring, you don't just want to hold. But that's personally how I look at it. I do like as I said, the only reason I prefer that to trailing stop losses is because I'm watching the market all day, every day. So I don't really need to lean on, automated exits like that. But I think for most people that aren't watching the market all day, every day, the trailing stop loss is just the best thing to use. And where you set that really is your um is up to you. Um we're going to go in order. Trading the open, I rarely like to trade the open. I like to either trade pre-market, as you guys have seen me do more and more lately. The open is just kind of a mess, very volatile. I prefer to get in pre-market versus the open. I really do like to wait until about um, maybe 11 or even noon before I start changing positions and really thinking about it. But the one thing specifically that I don't do is I don't trade for like the rest of the day. Um, I have to be like, okay, I see this holding through. Like if I'm trading at noon, I've got to see whatever I'm trading holding through tomorrow. And um I really like to either make a bet at close. Um as I do with the trading letter very often based on where I'm leaning, because I think there's the most kind of benefit in that if I make a good guess of where it's going the next day, right? And then I also like to do pre market because I actually had, especially in this market, this volatile market, I've had a ton of success in just betting whatever happens pre market, I'm going to see some continuation of. And when I say that, I mean it on the stock level, not on the QQQ SPY level, because I see tons of reversals. But in terms of like I would say individual stocks that I either like or don't like that I see do well as the day is opening up, um, I've just seen a lot of success and continuations of that throughout the day. Hopefully that answers your question. Um, and then I don't know if it's Mickey or Mikey. I think your name is Michael, so Mikey makes more sense, but it looks like it's spelled Mickey. Or maybe Mickey's are Michaels. Anyway, you'll tell me. How do I size my positions? Um, very haphazardly, to be honest. Um, and I'll tell you why. I mean, haphazard actually isn't, you might say in a very bespoke way instead of haphazardly, but I use haphazard in, maybe a more positive connotation than it normally is it's really just like, it really depends. And a great example that I would give right now is Meta, right? If you go in and it's been at different times higher, right? Um, there's if you go and you search in Prospero, you go in upside breakout, right? Meta is at 100 and the next highest is 87, meaning it's that much higher in our scale. And when we do our screeners, Meta is that much higher in our screeners, right? So, like, that's something where, like, I would say that kind of dictates a larger sizing of Meta to like what I would advise any like newer, non expert, smaller amount of time retail investor, which is to just keep a very small portfolio. But in that small portfolio, like I would advocate for Meta being a larger position. But like, I don't think there's any one way to do positions other than something that I'll tell you that is actually a good game theory lesson that that applies to like casinos and blackjack, or actually, I would say the way people play blackjack is actually the complete opposite of the proper game theory. And this is actually, I think, a really good way to think about if you're just sizing positions in what I would call like a textbook game theory kind of way, which, unless you have more experience, I'd really advocate for. And that textbook game theory kind of way is that what most people don't understand about blackjack um, is that, or a lot of people I would say in an applied way don't understand, is actually like the math says when you lose, you actually bet more to gain back the money. Like, and it's like double or nothing. If you have the guts, you can keep going double or nothing. And the odds are saying it's very hard to lose that many hands in a row and you'll end up back at zero. Actually, what most people do is the opposite of that, where when they start losing money, they'll bet less or they'll bet too much at the jump and then start betting less, which is the opposite way to go. And it's longer to dig yourself out of the hole. And actually, most people go in the opposite direction, where they'll bet more when they uh, when they start to win, which is the bad game theory. But the lesson in this is actually in position sizing for lack of, I would say, a lot of expertise and the right instinct and kind of knowing exactly how you want to size things. I would say that defaulting to the strong game theory is the best way to go, and just like doing equal sizes. Like I would say smaller portfolio, equal sizes. That's the easiest way to make sure you don't mess anything up from a risk management perspective. But I would also say that I think it's good to get to a level of expertise and feel where you feel qualified to make these positional assessments on your own. Because there's a lot to win from that, as you guys have seen, especially as I start to like double up um, on my newsletter picks a lot more this year. Damn, I'm getting close to 500 again. I'm sitting at 444 after some good shorts this morning.
That's
And a bunch
something
of
we could
focus
talk
and pivot.
about a little bit. I saw your threads coming through this morning after the CPI was out. So maybe you could talk a little bit about like what news events you pay attention to, or how often you actually make a move off news events, strategy of news events.
So I mean, I would say the way I approach news events is like going in, having some kind of expectation about what's going to happen. And I've been actually concerned about inflation cooling, right? So I go in, I have some expectation. And for those that have been watching, I've actually been, at the end of yesterday, even before this, I was pushing my portfolio more short, even though the option sentiment readings didn't necessarily dictate that. I was kind of nervous about this event. And that's the thing, as good as our signals are, there's some things that just like Powell speaking that it doesn't have that information. Or like Powell speaking, these CPI readings, it doesn't have that information until it has it. So sometimes you have to take a view in advance. And in this case, it was definitely my view that that we were going to uh, definitely have something that was going to be a difficult event today. And then as I saw the market start to match that view, where I definitely saw it start to go down, like then I kind of took it to the extreme. And we had seen a nice recovery in consumer discretionary lately. And that's when I said to myself, oh, we've seen a nice recovery in consumer discretionary. I think that means the attack on these consumer discretionary stocks are going to start. And I was even a little late, but I like to get confirmation that the event has started, right? In what I said, I started to see them start to get hit. And then I loaded up on a few just consumer discretionary names that I had locked and loaded as good shorts. And it's gone very well today. But I think that's all. Like, I think any good trader will tell you, like, that, or any good investor or anything, it's all about prep. I had kind of done all this thinking beforehand. So when it played out as I kind of was expecting, it was kind of easy to pull the trigger on all this stuff, and I kind of knew exactly the names that I was going to target.
Seems like we got a new influx of viewers, so I'll just say again, we're answering all questions, so feel free to comment them, and we'll get to every one of them. But as people comment, I'll ask you another one that we have prepared. So I've heard you talk about before, like about the different sectors in different manners. So specifically, like real estate and bank stocks tend to have lower net option sentiment, and even when you look at the QQQ and SPY net option sentiment, it can be far lower than, say, Tesla or Amazon or Meta, or many tech stocks. It has to have a high net option sentiment to be bullish. So, can you talk about how you view these signals different in different sectors? Um, you know what I'm getting at there?
Absolutely. Right.
Okay.
So some of it is just that, like, I've observed, I've looked at sector averages sometimes on this stuff. Um, and um, I would actually say uh, that I know kind of what runs lower or higher. But some of those are just like natural things. What tends to run lower in net option sentiment are industries that people speculate on and pay more dividends, right? So like things like financials, industrials, um, energy, like utilities. Those are like more dividend based. So like, why would people like speculate less on options on those? Because you have to hold the stock to get those dividends, right? So the options are less interesting. You're not going to see the same growth, right? So that's why certain sectors are going to run higher. Like, because like in especially something like option sentiment, you're just going to see more options bets on higher growth industries, especially tech, right? So there's all about that. You always have to be benchmarking, right? That's thing one. Um, thing two, uh, and like obviously having some knowledge of this stuff. Um, but then when it comes to indexes, like there's so much interesting behavior. And like one of our best calls back in August was when we called a bear run because we actually saw SPY net option sentiment go above QQQ net option sentiment, which it stayed for a while. But to me, like you have to think about like what these indices are used for, right? And people traditionally like SPY net option sentiment traditionally runs lower, and we talk about like a zero flat line because when people are hedging the market, buying puts on the S&P is the most natural thing. So basically, like what you're seeing as S&P like SPY net option sentiment goes down, that's just a lot of people hedging, right? And net option sentiment is a net, right? So you could basically have on one end, maybe for finance, like lack of speculation in terms of demand for calls above where it's trading. But then you can also have net option sentiment swing the other way, right? Where there's people are just like buying a lot of puts below where SPY is trading that could like swing it down. And that's what's really cool. A lot of it kind of encapsulates a lot of information like that. So yeah, how it runs is different. But I would say the most important thing is looking at that time series graph for net option sentiment, upside breakout, downside breakout, less so. But get a feel for what the stock typically is, and if it's like on an upswing, if you're seeing higher highs or lower lows, or even higher lows, um, those are good indications that that regardless of what the value is, like there could be a swing in price. Because even a move up to 20 from 20 to 40 in option sentiment, that could be something in like a financial stock that, especially if it has high upside breakout, lower downside breakout, higher profitability plus growth, I could definitely move on that on the long side, even at a 40 net option sentiment, because financials just run lower.
So we got a question about ANET and shop earnings and how the Prospero signals related to those before they announced.
Oh, what happened with ANET? I mean, what happened with Shop? I meant to take a position on Shop, but I was gonna go long. Ah, good. I didn't see. So yeah, I mean, we didn't see. Um, we definitely saw like a ramp up, in net option sentiment, but we also saw a ramp up in downside breakouts, on those things, which means there was a lot of institutions like increasingly betting on a short-term upswing, but also institutions increasingly betting on a long-term downswing on Shopify. So that is a very interesting um, that is kind of a very interesting um, thing that we had going there, and why it's always good to check on the surrounding facts. And like as we said, like as we looked at Shopify, where it's like there's always multiple stories and not always just like a very clear thing. So as I saw, Shopify net option sentiment going up, I also said like, that could also be a lot of people just basically trying to like prop up, get excitement to get cheaper put options that they're planning on also betting the other side on. So there's a lot of different strategies, a lot of different pieces of information here that you have to look at. And like every single signal, it's not right all the time. Like obviously our hit rate on this stuff is really high, higher than most. This year is crazy too. We're at through our first almost 60 picks, we're at a 74% hit rate. But last year we were about 60%, which is way better than what most anyone's doing. So these signals really work, and better than there's a saying on Wall Street, you could start a hedge fund being right 51% of the time. But like, it's important to think about that too, right? The signals are really powerful. They can help you hit at a higher rate. But even me, like that was a professional value investor leveraging these like signals. I'm hitting at an absolutely insane rate of 60%, but even I'm right. I'm wrong 40% of the time, like in last year. So I think that's a really important part of it that like it can I think Prospero is really good at supporting trading strategies or investing strategies or whatever it is, help your hit rate get better, help you make better decisions, see what you might be missing. I think that is like just a really, really important part about it. But yeah, like I think as I said, there's multiple stories. I'll take a look at ANET as well. But ANET, yeah, I mean, it had a bit of a dip prior to earnings. Also, the upside breakout on ANET went down prior to earnings, and the downside breakout went up prior to earnings. So, like, that's another case of like complexity, right? Different people making different bets, and Wall Street isn't always going to agree. And one of the things that I think is so important for retail investors to understand, and what I remind them all the time, is like hedge funds go out of business every year. There's ones that die. Like on most trades, like the majority of trading or investing in the market is institutional, the vast majority, right? And like anytime there's a winner on one side of the trade, there's like likely an institutional loser on the other side, right? So people get this stuff all the time, and this stuff is complicated. If there's one thing that I try to teach um, in the newsletter picks, especially, I would say that like because it's so complicated, I try to shrink the world as much as I can. And looking at something like ANET, I think is the perfect example. Um, where upside breakout was up, downside breakout was down. I mean, sorry, downside breakout was up, upside breakout was down, and net option sentiment was on up the upswing. So that's basically people saying longer term, they're more worried as they were more ambitious in the shorter term too, overall, right? So it's really complicated. That's not a lot of clarity. But what I always say is all of this stuff is just about everybody forming their own opinions on things, right? And your own conviction. And there's nothing more powerful than that. And like I said this to people in the AMC trade all the time that were like, oh, like, this is fun. You can't talk about fun. You're blah, blah, blah. And I was just like, fun doesn't exist. Like, it's a dumb concept. Like, this idea, and like, by the way, all you people think you're going to get this short squeeze and everyone's going to hold to like $1 million a share, right? But think about that for a second. You think that people that can't even hear any bad news are going to hold out in the trenches as this thing goes to $1 million? No, that doesn't make any sense. Like, as an investor, and why I talk about conviction, you need to be able to hear bad news and stay in your conviction, which is why if you're taking too much advice from other people, like you're a table with a wobbly leg. If you find your own way of like using Prospero, your own research, everything to find conviction, you're a table with strong legs. And that's what you need to be if you're going to have the resolve to win and have a process to win again and again.
So we got a question, the first one from Twitter about are there two versions of the app? But I believe I can answer that. Our app got a major upgrade, so I think if you remember it looking differently and you're looking at it now, that might be why you think there's another version, but that's actually just the newest, latest, and greatest version of Prospero. There's another question from Jonathan about how you were so excited about SMCI and still are, and he's asking if you feel that way about another stock and if there's another SMCI coming for next year or this year going forward.
See, I mean, I think um it's hard, right? And you can't force it. One of the reasons that I loved SMCI so much was that I saw a really clear path of AI and the growth of AI. I mean, what's the next SMCI? I think Eli Lilly is probably the closest to what I see now, in terms of just something that uh, that could have that kind of like Ozempic competitor, that like major growth, and then also stability. I also think SMCI is the next SMCI. Like, I mean, I don't think there would be I don't think there would actually be a whole other I don't think there would be a whole other like this year type of growth. Um but I do still think like, and it's funny, I don't know, like I get this ongoing like um what is this like PE thing and like disagreeing with NASDAQ or whatever, but like I think NASDAQ has its sources. I still see 0.77% 2026 point like 0.77 PE. So yeah, SMCI, like especially if you're talking about things that you're holding from a couple of years, like unless you're predicting catastrophe for that business, like you gotta figure that it could be priced closer to how like chip AI, whatever is getting now, which is at about 40 times current earnings, which means by that math, by 2026, there's about 40 times for the stock to go up from here. So yeah, I think SMCI is the next SMCI. But I also really like Eli Lilly in terms of that high upside um, and good risk floor. There's kind of other stocks that um, that are big growth names that like I'm not even going to mention because I don't necessarily think it's the best time for big growth stocks that are more pure growth stocks. Um, but yeah, I think that like those are the two names that and then obviously we love Meta. Like there's like some of these ones are kind of like it's hard because one of the things that I love so much about like SMCI was kind of just like an easy slam dunk diamond in the rough kind of thing, especially as I dug in more. I'm always on the lookout for it, but I think maybe to wrap this up, a lesson in just like looking for the next big thing. I don't really like to do that. Like, because if that's my framework, I'm departing from my most comfortable framework. And my most comfortable framework is a high floor. I like I like to start from a place of like I don't see this stock going down very much more. That's what I prefer. And then I like from there I can say what has upside in addition to that. So like my comfortable framework isn't looking for the next home run. And like to take the analogy to the end, like actually a lot of like the best home run hitters especially now like will tell you that trying to hit home runs is the worst thing that they can ever do. And especially when they're in a slump and they're trying to hit, that's when they're like striking out the most. So I think if I can impart any lesson, it's like to not look for home runs and to just like look to make contact, look for high floor. And you'll do just like much better and you'll end up hitting some home runs that you didn't know.
Okay, so next question from Amy is asking if you're going to be adding graphs for any of the other signals like net institutional. It's hard to know which way it's trending otherwise, she says.
Yeah, maybe. I mean, the thing about net institutional and just to like the trend in net institutional isn't that important. We're probably going to redo it, to be honest, because right now it's like very focused on 13Fs and 13Gs, which don't update very often. So a time series on it isn't very useful, like especially the majority of institutional updates are 13Fs. If you want to get really reliable information. And 13Fs are once a quarter, right? 13 Gs, or if you own greater than 5%, those are intermittent, but you don't necessarily get a ton of 13 Gs either, right? So net institutional flow, there's a reason we don't waste the space. It just doesn't move that much or that fast. I agree. When it does move, that's an interesting thing to have, but we kind of balance out like what has informational value, what has good placement there. I do think as we think about Prospero getting a lot more like feature rich and growing, we would like to have a lot more optionality to like, hiding and unhiding things like that. Getting a good, like kind of adding complexity in the right ways. But when we talk about that, we talk about like new features being more valuable. And I'll give you like a really good example. We have this really cool thing called sharp rating that we haven't been able to get out the door yet, that we actually want to pull that institutional flow out of the 10-point graph and have a whole institutional section that has sharp rating. And sharp rating is really cool because not all institutions are equal, right? The sharp rating we actually want to put basically look at churn, like how often institutions, like who owns a stock, like how often they churn through their positions, how often they use options as a percent of their total portfolio. Um, and um, basically, that's kind of how we look at things. We're just like, if we're going to put new things, and new engineering resources on this at that point, we kind of want to make sure we are really adding value. And the value that we'd be adding to like time series on net institutional flow is not nearly as high as in our estimation as some of the other new features that we could be rolling out. Like right now, we're working on turning institutional flow into technical flow that actually takes kind of like our own take on a technical signal, loops in some of the institutional flow, loops in kind of larger trades, and kind of puts all that together. And that's us kind of like improving that signal even more because we don't like how slow it updates. Like that's not how really the rest of our signals work. So we have improvements on that. And hopefully that's helpful in terms of just like how we think about these things.
All right. We got a thank you from Anonymous, but they say they're a big fan of Prospero. But after that, we got a question from David. So in your weekly Sunday newsletters, you have oscillators and moving average in your charts. Can you explain what those mean, the differences between them, and where they come from, internal or external?
So I'll just walk you through this. Um, so yeah, Amy, what I would say just to put like all like the reason that we don't display them is we just don't think they're as of as high value. Like even something like short pressure, like the difference in that, we don't necessarily think the difference in short pressure is something that should necessarily be like a decision point in investing or whatever. Like or like when we do fill that space, um it will be kind of like with new features versus getting like other ones online. And part of the difficulty is when these things are on different schedules and they don't necessarily like match up with price or our data set. So there's some like back end stuff in terms of just the amount of engineering work that would take to get those online. But yes, it's hard to make these choices sometimes. I do think it would be helpful. I agree with you, but we have limited resources and some of the new stuff we're getting, we're just more excited about getting it online. Um, for David, I'm just gonna like kind of pull up exactly like where we're at with that. And I'll share my screen. Um, there's a lot, and I'm doing it because there's a lot of oscillators, right? So I'll walk you through this. Um, we're pretty open about this. And the idea, if you see this link below to the picture below, if you click on this link, you can actually see how you get to the technical analysis, right? So you can actually see here, like not only that, I gotta delete this, right? So you can see there are a lot of oscillators here, and this is what we like about this, that we're getting a lot of information in one thing, and it's like an easy thing that you can Google and look at yourself or click into, right? But all of these oscillators are different. These moving averages are a little more straightforward, but obviously there's some more complexity there. And like what I would actually say is like, and I think this is probably like not the answer that you're looking for, is I don't really even care what the definition of any of these things are. Because like I'm never going to become an expert in this. I'm never going to be coding any of this stuff. For me, it's actually like much more important to just see like kind of agreement in these technical indicators and whether or not that agreement agrees with my view, right? Because these are here because it's kind of the best of the best. Um, and like all what I do, what I can tell you about technical indicators and how they come to pass is all of them are just generally like dependent on linear models, a lot of the times regressions, and they're just trying to draw a line between these patterns and stock price movement. All of them are kind of taking their own flavor about that, built by different people, different linear things. But like again, like as I'm telling you, I don't even learn what all this stuff means. I don't think that's the best use of my time. I mean, I could rattle off some basic definitions of that, but my point is like, I'm never going to be an expert in this. I don't want to be an expert in this because I consider this an error check and something that like I actually think only works as an error check. And just like an extra way to be like, okay. And the only, by the way, the only reason I use these things is actually because I know algorithms trade on these indicators. Not that I think they are strong leading signals. I just think that enough of the market moves with them that it's worth knowing where they weigh in.
All
All
right.
right.
So, oh, Jinx. After that, we got a question from Jonathan. He's talking about how Google's upside breakout has gone up, but the stock has gone down since earnings. And does that mean it's time to buy Google?
Yeah, I mean, I kind of want to take a look at that myself. And that's just a really easy explanation, right? When you actually see something that's simple and linear. Yeah, that's a nice little trend. It is worth noting that downside breakout is also going up. So like that's more volatility, but it's obviously lower. It's a lower value. But like, yeah, you're thinking about it exactly the right way, Jonathan. Um, it's basically like a consistent pattern of people saying like, well, if this price is going to go up, I see better value. I'm going to keep on betting more in the long term options markets. Now, of course, like, yeah, I do feel the need to point out that, um, let's just like look at the last week since February 6th, right? Upside breakout has gone up from basically 80. Like, I don't know, let's maybe look. Um, well, it was down at 80, yeah, and it's basically at 81, 82, right? So that's not significant, right? And over that same time, like downside breakout has actually gone up from looks like about 23 or even 16 up to 29, right? So it actually looks like downside breakout is going up faster than upside breakout. But that's kind of the whole thing of like raw value trend, right? The raw value is saying Google's more of a buy than a sell. But the trend line actually says actually kind of the opposite of what you're saying. That net net, more people have started to bet against Google long term after earnings um, than for. But the complications of all this are that you don't really know how people um, how people trade this stuff or what they're thinking, right? They could be betting, they could be buying short-term options, call options, and then buying long-term put options to just hedge themselves. And they say, I think Google's due for a turnaround shortly, but if not, at least I'm going to own these more profitable bets against long term. You just never know what people are really doing. But that's how I actually read it, to be honest. I actually read it that um, that people are actually getting more sure that Google's a bad long-term bet, but overall, they still think it's a better short term, like it's still a better long term bet than not.
So, what would happen or to a stock in your view if breakout were to surpass upside breakout? Would it become uninvestable, at least in the short term?
I mean, I actually frequently like will go by that rule where like I don't want to really own anything long that is higher upside like downside breakout than up. And I don't really necessarily want to own anything short that has higher upside breakout than down. I think that's a good safe rule of thumb because it's really kind of an obvious thing, right? When you have um when you have uh basically more people betting for than against something, and that's really kind of how it comes down to it. Like when you have that, uh, it's a better risk management, right? To like avoid those situations where there's more institutions betting against than for long term. And I think that's just like a really easy way um, to think about it, and a really easy rule that I try to go by.
Okay, so we're running low on questions, so maybe I should just ask our audience if you want to ask any last questions, feel free to comment them. And while they're thinking, if they have anything, I could just post to you. Is there a specific investing style that the Prospero signals work best for? So, like for example, options trading, long-term investing, short-term trading. Like, is there any particular thing that it does best at?
I think that the way we think about it is that it actually supports any strategy. And we say that and I really mean it. Um, it was really built to be a blank canvas that you can kind of see what you want and hopefully like it supports like blind spots you might have, confirmations of what you're seeing, things like that. I would say are just like very, very important and flexible. Like I think personally what uh I think kind of like what style I think is just like the safest investing style in general is just pretty simple, like what I preach in the newsletters, which is just like stocks that are good in long and short term signals, right? Even even just like what I do, just like profitability plus growth plus net option sentiment plus upside breakout is like the filter that I've done for a very long time in the newsletter. What's working really well this year. That's just like a really good like long-term risk management. If all those things are good, like your probability of being right is a lot higher. Um wow. I mean web by website you mean web app. Um, like we are planning, that's one of the products we're planning to make this year. I would say after trade alerts and kind of like an enhanced Discord. It's there. Um, and we kind of always, I mean, in terms of how we pitch to investors, we're very, very open. This is our data room. You can look at our deck, you can look at whatever you want in terms of how we pitch ourselves. Um, yeah, Spiky Dude, we're gonna make a web app this year but it's not done yet. Um, but yeah, that's our like if you click on that link, that's our data room and that has like everything in terms of what our strategy is.
What do you think, George? We'll give anybody one more minute to comment some questions. Is there
It's
any topics
last
you I didn't bring up that you wanted to hit on?
No, I definitely want to do the newsletter. I have a definite I'm a little behind on the newsletter. So I definitely want to do that, take a look at everything. Well, not behind. I mean, I actually wish that I had went um more short. Oh, this is great. I forgot to put in my VSAT position from yesterday, which is doing very, very well. So um I actually think that I might be above 500. We can all find out together if I made it. Here we go.
Fingers
I've
crossed.
been trying to get above. Um, I mean, it is a cause for concern, right? But I think you're right. Like short pressure being high in SMCI, it's definitely a cause for concern. But like where there's risk, there's reward. That's also how I look at things. Um, so I think it's both. Like to me, like everything else is so solid with it, and it's in such a strong position that um I we're so close to 500. Uh that I kind of look at that as a plus, right? I'm just like, I think everything with SMCI is so solid, like we could actually like get shorts to give up and add just like more fuel to the fire. That's kind of how I look at it. But like in a vacuum, I would actually probably prefer that not to be the case. You don't get to pick and choose your things. Um, but like honestly, my preference like is to just have as easy slam dunk of a trade as possible. And it is objectively scary with like high dark pool, high short pressure to know that you're like up against some aggressive shorting institution. Um, so yeah, it's definitely, but the flip side to that of like, okay, this is a non-ideal circumstance to me. For me, the flip side to that is obviously that um you get that larger reward of like, hey, if you do get these shorts to capitulate, that's a bigger win. Oh, we did. We just crossed 500%.
That's
On the
pretty
piece.
amazing. That's pretty
I
amazing.
know. Yeah, it is. All these shorts, I opened them up. I started yesterday. This the strength of having like conviction in what you do. I was definitely pretty excited about like potentially getting ahead of this turn. Um, and there we go. We made it. Um, all right. Let's do this update so I can get to the rest of my work. Um, all right, here we go. First things first. Oh yeah, actually we have this new thing. And I forgot. We definitely have to ask. No, we don't want this. Why are you being like this? Um, we've got our new stop tracker, so we don't have to push, right? We got this nice long tracker. Let's see. Uh-oh. KLAC is in bad shape. Let's see what's going on with it. We just added it yesterday. Sometimes you can't win. Oh, SAAIA went into the negative too. We have multiple things to investigate. All right, let's look at KLAC. Downtrend. Hmm. Oh, look at that. That's going to go in. Um, that's all. It's so close though. All right, we're going to hang on to that. I'm not ready to get rid of it. It's got such a good longer term trend. And basically like what I'm seeing here, like on the 5 and the 15 and even the 30, is it just going in that other I don't know. I don't really like that trend. I actually do think I'm gonna get out of it. I've gone back and forth. But yeah, I don't think I like it. I think it's just like with all this short stuff, we're bailing. Um okay, let's see anything else. We're gonna look at SAIA. Oh, did those TDG positions get closed? Brent's behind. We'll probably go above 50% on those. They should have been close, those TDG positions. That's in bad shape. Yeah, we're getting out SAIA for sure. TDG. Energy's turning around a little bit, I think. Oh, what is going on with ETN? ETN's always all over the place. But let's see what's going on. No, we got a nice little trend on ETN. Yeah, that's doing great. Good. I'm glad we held. That one's a tough one. It's always all over the place. What about this Apollo? I'm fine with Apollo. Oh, that's a new BKNG position. Oh, we closed this out too. Brent, a little behind. Oh, yeah, this is in horrible shape. Let's see. Yeah, this has been. We should have been out of this already. It's a mistake. It was already down in the signals. The Prospero signals told us very clearly that we should have been out of that, and we didn't listen. It's just what happens sometimes. Gotta listen when they tell us that. All right. VSAT. We closed VRNS. What's going on with VSAT? Is it turning around? Oh no, it's actually weakening. Oh, but on the 15-minute, all right, I'm going to keep watching that. Let's look at the 5. No, we're holding that. We got out of SS and C. What's going on with you? Yeah, you're doing great. We're holding on to you. SBCF. Yeah, looking great. That's a great one. Keep on that one. But we got to watch for that turning around. I'm actually going to on DQ. I want to bold that one because that one especially that could be when I see that and I see such a downtrend. Like what I'm actually concerned about is net option sentiment starting to get ahead of this trend reversing. That's why I'm bolding it. I do want to keep an eye on that. But I like where it's going. BXMT and DDD. That's good too. So great. Yeah. Sorry, guys. Not closing out any of them. We like those shorts. Okay. Do you want to tell me what's going on with QQQ and SPY net option sentiment?
Yes, sir.
Steven?
I'm on it. QQQ is at 40 currently. Way lower than yesterday,
Yeah.
unfortunately. And the SPY is at 39.
That is in a big dip.
SPY is starting to
Yeah.
have a pretty negative net option sentiment chart. It's like completely downtrending.
Okay. Now we're here. We got this. I'm just gonna actually get rid of those. It's time. I was never gonna use those again. This. This screener that we've had just has kept working for a while. It's nice to just build the same screener. Okay. What is this med P? How many open snow positions do we have? Med P's openings. Oh, it's like an earnings thing. Ugh. I hate earnings things, commercial services. It's very hard when I hate, yeah, see, it's down to 5. I'm not going to do it. Why I'm saying like I hate earnings things is because like you never know if it's going to be down 5% tomorrow. Oh, this could be better, even though it's not in a very good trend. Um, let me
You
know
want
what's
that
going
snow?
on with how many snow positions do we have open?
2.
Yeah, okay, that's it. Um, oops. What about fixed fee? Can you talk to me about the trend in that option sentiment?
Which stock
Or
was
sorry,
that?
fix. I don't know what fix. Yeah, fix.
It's at 84. I was at 87 this morning. It's recovering from hitting 34 on February 9th.
It was at 44 this morning. Do you see volatility in there? That's what I'm trying to wonder about that.
It's
Oh
very
wait, its
stable
gain.
besides one spike down.
Yeah, its gain is at 46. I'm not. I'm not doing it. What's going on here? Oh, I know what I did wrong. Uh, oops, I missed that. There we go. Yeah, I don't think I'm going to do it any longer. Just gonna paste this in. But shorts, let's see what we got going here. I think we have some VLYs open, right? Steven?
Yes, looking. We do. We have 2.
We have plenty of this. How about HUN?
Yep, one of those.
All right. We want to get out. I'm just gonna fix this today. Let's see. Definitely curious about this. Interesting. I think we definitely want one with. I'll turn this back. That's great. Can you tell me about the trend.x bit net option sentiment?
Oh, it's very similar to it's back down. It's at 10 right now. It was at 43 this morning or this afternoon. Big
We
spike
don't have
down.
any open eye positions, right? I don't think
Just
so.
I?
Like an eye, like what you see with.
Uh, nope.
We have at one point, but
Yeah. Closed 118.
here we go. Here's our more shorts. One more. I'm not for that today. I think we have 2 open outs, right? HIW. Damn. This is a bloodbath.
I see one open out.
Let's see what's coming off of it. I think that's enough. A lot of realty companies here. Interesting. What was the other one that I just looked at? Yeah, I'm just gonna do that. No, I should have never gotten out of this, George. I feel like this could snap back in the other direction though. Yeah, on the daily. I'm gonna keep my eye on it, but didn't do anything. We could have held that. I knew that was bad. Bad news. Okay, IPG is good. We'd love to short GWM. To just get Macy's, we might be overexposing ourselves, but yeah, we'll do that too. What's that? Oh, Sinclair. Let's get it on that too. That's a great. I think EPR is probably. I feel like I'm all filled up on this property stuff. Yeah, LMFA and then we are done. LM funding. Yeah, that's interesting. Yeah, let's do it. This is a very small market cap though, but yeah, we'll all right. There we go. All done. Another marathon. We're just gonna be me and you, Steven, we're just gonna be like online this whole week.
Yep.
Any new questions? All right, no new longs. We're definitely going more short, which makes sense given today. LMFA, FPG, VWN, IPG, HW, say, I, NCHP, Wish, Expert. I'm going to take one more look myself at
Well, I just have to take a moment and stop and thank our community of Prospero people because we hit 900 subscribers, and I wanted to do it by the end of the week, and we did it on Tuesday. So thanks everybody for subscribing. If you're still here, please subscribe
1,000.
to
That's
the.
the next milestone. Damn, even since we've been talking, QQQ net option sentiment is at 35 and SPY is at 33. I'm actually
Uh-oh,
just going to send this.
power hour negative.
I'm going to get this out now. Uh, I'm exhausted. Thoughts on ANET today? Um, we already answered ANET, but I'm happy to answer again. Basically, even leading up, we saw a downtrend and upside breakout and an uptrend and downside breakout. And even though net option sentiment was going up, now we're seeing ANET net option sentiment tick down. So that's less than ideal. But I would, we like it long term, and there's great reason to. So I would keep watching it tomorrow before making any rash decisions. But I wouldn't really I wouldn't close any positions I had, but I definitely wouldn't open up anything new on ANET until we kind of see the data tomorrow, given everything that I just said. Any other questions on that? Thanks for the questions, everybody. Um, and
How did that
we're
happen?
back again tomorrow.
This
I don't know.
question like highlighted and like showed up on our screen. I've never seen that before.
No,
That's
I know.
cool.
I clicked. I like. Oh no! It's like show. See if you can do this. Like yeah,
Oh yeah.
we
Oh,
can
that's
just flash
cool.
it. Yeah. I didn't watch
Okay.
the Super Bowl. Oh, I just saw that. Spiky dude. Uh I didn't uh I didn't know that that we could do that. But like yeah, I like I'm a Giants fan, which is just like very hard to be these days. And also it's just like football, it's just like the it's the brutality of it and the injuries. Like it was hard to ignore, but as they start to like add these Thursday games and then these international travels and like all of this like bullshit in addition to that, it gets harder to be a fan of the league and their hypocrisy. And even you like watched, I don't know how many people watched that like the game where the guy like Hamlin got injured, but like uh, uh, but like they basically had to be told. The league had to be told to stop the game, and the players basically had to be like, "We're not playing anymore. This is insane." Like, and go on strike, and the coaches had to do that. The league wasn't going to stop that. And then it's really funny. You hear the announcers in that game just be like, "Yeah, I hope everything's okay, but we gotta you gotta keep the game going." And then after they realized how embarrassing that was, they were just like, "Oh, like what a credit to the league and the coaches that said they couldn't play or like whatever." And that just shows like how hypocritical everybody is. Anyway, I could talk about this all day, but I've got other work to do. Appreciate you guys coming. And we'll see you tomorrow.
Yep. We'll be back tomorrow. Thanks everybody for joining. Talk to you later, George. Bye, everybody.